No relief for big tech stocks today. They are plunging again after seeing their worst day since the pandemic yesterday, dragged down by President Trump's new tariff policies that sparked a widespread sell-off. Apple leading the declines among the Magnificent Seven stocks yesterday, seeing its biggest one-day drop since 2020. Joining us now in our studio, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, you tend to be a very positive guy on most of your coverage. And your notes in the past few days have been as pessimistic as I have ever seen them about what this is going to mean for technology companies. I mean, what kind of hit is this going to cause? And are you assuming that the tariffs are going to stay in place?
Yeah, and I'd say, look, in 25 years going through, when you think about dot-com bubble, burst, financial crisis, COVID lows. So, I've seen every type of crisis there is. I think it's the most absurd thing that I've seen in terms of those 25 years. And I think it's an economic armageddon that's coming our way. And I think it could ultimately set U.S. tech back many years. And that's the thing that a lot of people don't understand. Talking to executives around the world the last 48, 72 hours is that I don't think a lot of tech companies are going to give guidance in terms of 1Q. And I think baked in here is already called 5, 10% cuts off the bat in terms of growth. If this stays, it ultimately, this becomes a black swan event. You're playing with third rail issue here.
Is that priced into these stocks if we see this kind of magnitude of decline hold today?
No, because obviously with China, and they're not going to lay down. So
right, they've said this morning 34% tariffs right back on U.S. goods.
Of course. And then I think it also comes down to the tariff chart, which continues to be a sci-fi, sort of comedy show. Those are not the right tariffs. So it starts with what's the number you actually even start with in terms of negotiations? And the longer this stays on, you can't stop a snowball once it starts. So the point is, do you burn the house down, but you still have a bagel in the toaster oven at the end of the day? And I think that's the frustrating thing right now for tech investors. Stocks are not Republican or Democrat. They speak volumes to what they're showing you, and I think that's the problem.
To the point of China retaliating with additional tariffs this morning, how does all of this play into the fact that the U.S. has been the dominant place for tech investors for so long? Does China start to outcompete the U.S. on tech?
It's a great, but just even go back to, for years, the reason China was such a bad market, you didn't know what the party was going to do over a weekend. So you couldn't invest in China.
Right.
To some extent, that's kind of what's happened here. So that's why I've seen so much global money going to Europe, going to China, going away, because you don't know what's going to happen. I think it just comes down to what's the reality? Is Back to the Future on TV? Is Hasselhoff on? We're not going back to 85 textiles in the U.S., despite whatever they say in the Beltway. The reality is that the U.S. tech infrastructure is built with supply chain in Asia. If you like $3,500 iPhones, we should build them in New Jersey. If you like $1,000 iPhones, you build them in China. And I think that fundamentally, and also it takes 4 to 5 years to build a factory.
And can we talk about that? Because I'm getting a lot of questions about your note on that, and people are interested in how you got to that $3,500. So for context, Dan had a note saying that the iPhone could be as expensive as $3,500 because of tariffs. Right now, it's around $1,000.
If they were built in the U.S.
Correct.
Now, off the bat, just on the tariffs, it's over $2,000. In terms of, you just look at the actual China tariff.
If I go to buy an iPhone after April 9th, how much is that? That iPhone's going to be $2,000. You think that Apple is going to raise prices immediately on iPhones?
I believe after Memorial Day, it's over $2,000. Because they can't, Julie, they can't absorb. We're not talking 3 to 5% through the supply chain. They can't absorb a 50% hit. And then it depends on whatever. We got to see what exemptions they get or whatever. That's why this is, look, it's a black swan event. Going back to 3,500, look, the reality is, so many people that watch us from afar, they've never been to a fab in Taiwan, China. They don't understand. We don't even have you have labor where people, whether Starbucks, Chipotle, $22, $24 an hour. The reality is it would take them $20 to $30 billion in 3 years to move just 10% of the supply chain to the US. So you could talk in front of the microphones in the Beltway and it could sound awesome. You could paint this fairy tale Pinocchio picture. Yeah. That's the reality, and that's what stocks don't lie, and they know it.
So when do you, because you're still overweight all of these names, when do you change your rating? Is it Memorial Day when you say the iPhone's going to be $2,000? What is it that causes that real fundamental hit?
Well, by then it's too late. Because I already think, like, just the fact that this happened, I'm already seeing the uncertainty across tech. You know, it's not just consumers, enterprises, hey, let's slow down CapEx. What does this mean? That's already factored in 5-10% cuts. If this actually goes into effect and lasts, let's say, a month, it's in my opinion, it's guaranteed recession. And you now start to be like, okay, now it's a game of chicken. Like, ultimately, when do the tariffs, do those get negotiated? What do they look like? But as it's happening, guess who gets hurt? It's the U.S. consumer. And that's why I just continue to stress is that all the companies and all the investors I talk to around the world, the reason I'm so negative is that this is a self-inflicted, worst policy decision in 100 years. And I don't even think it's a debate relative to everything I've seen.
So to Maddie's point, April 10th, do we see a wave of downgrades from Dan Ives if this is still in place?
Look, I think we got to evaluate what numbers look like. Because I can tell you right now, like Nvidia, you're already baking in numbers come down 10-15% at current price. So if you start to see some negotiations and you're able to basically be like, okay, toss out March quarter, okay? Because that's basically in the past, 2Q is going to be a disaster. Street will be able to look through 3Q, 4Q, okay, what's normalized 26. But to sit here and say, no, Tara, this is no big deal, I think they're not going to leave. You'd have to be from an alien nation to actually think that.
So for Nvidia specifically, obviously the big deal, I mean, it's already sort of navigated around China to some extent. It's really the Taiwan tariffs, I would imagine, that are the biggest deal for the likes of Nvidia. So what if the tariff stays in place on Taiwan? Like, what are we talking about?
And you guys see the semi piece in terms of like what they're actually, tariffed at. And
you mean if there's the sectoral
the
tariffs,
sectoral
yes.
tariffs, right. And then the reality is that it's about growth. See that is the biggest thing here. It's not even just the cost and the impact there. It's growth. It's company X being like, hey, I was going to spend on these projects. Let me slow down till we see what's happening in our business. And that's the problem, self-fulfilling prophecy as this comes out. And I just think it continues to be the most befuddling, absurd thing that I've seen, self-inflicted economic Armageddon. And I don't think there's a debate.
These tech CEOs who were proudly there on Inauguration Day, now the Mag 7 losing $1 trillion in one day. In your conversations with them, do you think that they regret that support?
Look, I think in Silicon Valley, they are dystopian. I mean, it was like they're waking up being like, it feels like an altered universe in terms of the way that Trump has navigated this handle. Reciprocal tariffs, you knew was on the table, 10-15%, play games, poker, fine. But to actually try to build this chart from like the Goodwill Hunting chalkboard at MIT lab and say it's some fancy chart, it's basically, it's essentially a trade deficit converted into some weird tariff chart. It's not real tariffs. So that's part of the problem is that that's like me saying like I play in the NBA and my name's Jim. So how do you even know? Where do you even start with the conversation?
So as an investor right now, when you're looking at all of these large cap tech stocks that are falling, what are you telling people to do? Just do nothing? If you have them, just hold on to them and wait.
What we're doing is we're basically going through worst case scenarios. Where can Nvidia earnings be worst case? What is Apple, Microsoft? So you have to do scenario analysis and then basically say, okay, based on this, is it base case, best case, worst case, do scenarios. And look, we're taking out the COVID 2020 playbook. So you're basically looking through like, forget 2Q, probably forget 3Q. What do normalized earnings look like when you go out to 26, assuming that this normalizes? But then the problem is that you can't put the genie back in the bottle. Does it create something that's much more sinister in terms of a black swan? I think that's the worry. Yeah. And then also it just comes down to like the confidence in the Beltway. It's something that unlike anything I've seen, I've navigated everything from .com bubble to today. Right. So that's why I don't just sit here. So many of those other moments were times that just you buy them, you don't work. This is one you cannot say that given you don't know the rules of the game.
So how long, really quickly here, how long for these stocks to recover, and how long until we start hearing about layoffs at these tech companies?
I think you don't have layoffs for another few months because no one until you have a good sense of what the actual policy is in negotiations. So I don't think any companies go down that route. But when it comes to like how low can they go, it comes down to like till you bake in a full-on deep recession into these numbers, then the stocks could continue to fall.
One more question, going back to the iPhone. If you're thinking you might want a new iPhone, but you've been going back and forth, you better go get it right now. I mean, are we going to see this sort of bump in Apple sales ahead of the tariff imposition?
Yeah, but that bump is it's meaningless relative to the dark storm that's coming. And then it comes down to like the average car is going to go up $5,000 to $10,000. So when the reality of that, UAW workers, they could be happy at that moment, but then all of a sudden when you have to lay off 15, 20%, your GM Ford, it's not such a happy day there. Yeah. So I think that's the reality, is that many are underestimating the unintended consequences of what's happening in the worst policy mistake in the last 100 years.
You know what you just reminded me of? How do we get through a conversation with you without talking about Tesla?
Yeah.
Is this like unprecedented?
Look, and the reality is when you look at Tesla, like Musk, I mean, it's moment of truth, because bottom line is the longer he stays in Doge, every day the brand crisis for Tesla expands and gets worse and worse. And that's why Tesla's become a political symbol, a debacle for Tesla shareholders with such great future. But it comes back to like, this is a fork in the road for Musk when it comes to Tesla. He either leaves Doge, takes a huge step back, or this will be, I think, some pretty dark times.
Let that sink in, as he might say.